Hey, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. Welcome to today's session of On the Radar, live market updates. It is the, what day is it? It's the 18th of February. This is Thursday. This is the last one of the On the Radars we'll do for this week. Tomorrow, we'll jump in and do the How to Make Money Trading Stocks and Options. That is also a free session that you can join us with. You just join it. You basically, if you send me a note, I'll make sure that you get an invitation to that Zoom meeting, or you can pop over to our YouTube channel, Market Tech Talk, and also join there live. Again, that's at 11 a.m. Pacific time. And then for premium members, we will basically jump into our final hour at 12 p.m., 12 straight up noon, Pacific time also. So let's see what's cooking. One of the things I want to cover with you today is the market's looking a little bit like it wants to sell off, but it's just doing so very, very slowly. So what does that tell us, and how should we be anticipating that? Well, one, you trade the charts that's in front of you, but we are getting some initial indications that the momentum is starting to shift and move down. We haven't had, we're having indecisive candlesticks. And so that's, let me get my drawing utensil up here. There we go. There we go. We'll be able to draw some drawing. And so what does that tell us? It basically is the indexes could be in for a nice pullback. As we're seeing, some of the things that we're looking at are starting to happen. Is we're getting the TSI starting to, not only turn over, but also cross over to the downside. What does that typically mean? Well, one of the interpretations for that is that typically when that happens, it means we've put in a temporary high. And so we can sell options against that high as in the form of bear call spreads, or bear put spreads, which of course is a debit spread. And so what are we looking at happening here on the S&P? As you can see, basically prices did push up a little bit higher on Tuesday, the first trade day of the week, but then almost immediately started selling off from that high. I left this in the full scale motion, full scale piece, because I wanted to highlight a couple of things. One, this last pullback, this last trade-off that corresponded to that place right there was deeper than it has been in any of the other pullbacks going back to October of 2020. So that was deeper. That's part of the first things that get in place. You start hammering against the more shallow moving averages, and then you get a bust out to the bottom to a lower moving average. In this case, it was the 50. And then oftentimes that jackhammer effect will wind up rolling the index over, or the entity you're looking at. It could be a stock or an ETF. And in this case, it's the ETF. Then it starts rolling it down. And then finally, at some point in the future, because topping is a process, unlike an event. Oftentimes you hit a bottom, and it's more or less an event where it happens in very short order. However, tops take time to construct. So on the SPY, not interested in buying it right now. It needs to do a little bit of a pullback, and as you know, I prefer trading the Qs. Now the Qs look a little bit, again, similar type of actions, pulled all the way down to where the 20. Found support there, bounced up a little bit. However, when I pop over to and here's one of the things that I was looking at for a right before the close, and we'll see how this works out going into tomorrow. But right before the close, we get a bearish engulfing pattern on the Qs. And so one of the things that seemed attractive, like, well, if this kind of a pattern continues to happen, it's where it zigs down in the morning, pops back up in the afternoon, zigs down in the, gaps down, zigs down first thing in the morning, pops up in the afternoon. So if we get something similar to that tomorrow, we'd anticipate a zip down in the morning, a gap down, and then what? A gap down, pull down, perhaps to a lower low, and then a zoom back up. So that's what I'd be anticipating going into tomorrow. We can throw on a couple of ways we can do it. We just grab this, draw. Yeah, that looks like that's pretty good. Let that be the trend. We're in the process of setting up on the intraday chart, the 30-minute chart, a series of lower lows and lower highs. In order for that to be modified from where it's at right now, we would need to take out that high right there. Or if we pulled back, it may be that high right there. One of the things I did do, I'll throw this out to you, is I basically wanted to get into a position going into tomorrow with the anticipation that this is going to continue to pull down. And so what I did was I basically did a bear call spread, took a little bit of credit in at just about where it's at. I sold the 106. I bought the 108 calls that expire next Friday, the 26th. I picked up a little bit over $1 for that, $1.07 or so for that $2 wide spread. And so it's a 1-to-1, slightly better than the 1-to-1 risk reward. What I'll do is if we do get that action where we push down here towards about the 101 or even about the 101 level, I'll look at just pulling some of that off right down there. Theta, time decay won't have kicked in, but I'll take, a good, on a dollar, I'll take a good 20, 30 cents in profit for a real quick 30% gain, and then hold on to the rest of it. If I bust back up above this level, about the 107 level, my high is, as you can see, my high is up at, of course I can't see it because my drawing tools are in the way, my high is at 106.96. So if I bust up 106, let's say 107.10, I'll go ahead and exit that trade. There's no reason to hang around on the trade if it in fact goes the wrong direction. Fire it as soon as possible. So that's what we're looking for. That's for the Qs. Again, one of the things I'm going to be doing a training session on in a video this weekend, posted over to our YouTube channel, Market Tech Talk, is about how to utilize these intraday charts to plan your trades. As you can see, we're popping off down here and dropping into lower levels. It pulled back up. We did the same thing. Could have possibly made this low today, given that we have the positive divergence here. That could have given us an opportunity to possibly get into a trade right here. But why didn't we? Well, we have to go over to the daily chart, and the reason why is oftentimes when the momentum is shifted the way it has right now with the TSI crossing over to the downside, until we get some kind of a price action off of a stronger level of support. Could it go up or we take out the high of the low day, which is the high of today? That's where we'll be looking at, okay, the momentum should shift then. But as long as that's going on the daily chart, going in this direction, I'll favor it to the downside. I can also look over here at the weekly chart. What's going on with the weekly chart? As you can see, I'll pop this open a little bit. And as you can see, we kind of set up a little bit of a, not as much of a head and shoulder on the TSI as we have on the IWM, but clearly price is making new high. TSI is not making a new high. We've got some good negative divergence on the weekly chart, and therefore would anticipate additional pullback. Now realize we do have a nice strong trend line heading up. We take out that trend line, and close below it, that could give us a clue that, hey, we're going to get some more pullback going into the near future. So the next one we want to take a look at is, so that's a trade we jumped into right towards the close, and that was a trade that I did only in my own account, and not part of the active trend trading system because it has happened too fast. One of the things with active trend traders, I like to get my my trades, or my orders out to the active trend trader premium members, where they have plenty of time to put in an order, and then you just sit there and wait for it to cook off. And that's exactly. And so the shortcut, or not the shortcut, but the real quick hitting trades, I don't send out a text message because oftentimes you're not going to have an opportunity to act on it, and I want to make sure that we attempt to have your results match what we're doing with active trend trading. So IWM, again, similar type story. Negative divergence going on the daily chart. Let's pop this open a little bit higher. We are finding support where? At the 20-day moving average. But look what's happening. We're jackhammering that 20-day moving average over. We break back down below the 218 level. That would be a fake out to the breakout, or a failed breakout, and then that opens us up for a pullback further into the 34 or even the 50. Why do we want to be? Why should we be concerned about that? Well, the 50-day is from where it's closed tonight at the low. The 50 is about 4.85% away, so that's about 14+%. If we were trading something like TZA, and TZA put in I don't really like TZA for, it's the inverse ETF. You want to trade this, be in and out of it very quickly, and right now, yes, we have it has broken up to the upside. However, it also, because of contango and backwardation, is in is just not a great performer. I like SQQ for if I'm trading the leverage ETFs, and I like LABD, and I like DRIP on the other ETFs that we in fact watch. So let's get back out of that real quick. Now, one of the things we talked about yesterday evening, and one of the things I want to talk about today, is the aspect of the concept of convergence of clues. The convergence of clues, or the confluence of clues that start to happen when we get prices starting to roll over, turnover. And what happens is oftentimes, if you find yourself over anticipating a trade, like in other words, as soon as like in this case, the TSI started pushing up into the upper reversal zone or close to it. However, at that particular time, we did not have we had no signals on the price action. So we did not have a confluence or a convergence of clues. As soon as we get this, when was that, on the 10th? As soon as we get the bearish engulfing on the 10th, then combined with the moving towards a rollover here, then you start getting a convergence and a confluence of clues until we get all the way over here where we get another bearish engulfing, hanging man, spinning top, bearish engulfing again, and then that gap down, that's where the confirmation of the clues took place. And so if one was quick about it, they could have jumped on a trade right there to trade it to the downside. The other thing about that is you would want to a cutting below the low of the high day, which is be right there, and that's something that Dr. Alexander Elder in his book, both his old book and his new book called New Trading for a Living book, he talks about as a very good way to be patient is to wait for price action to violate, if you're trying to get into a long trade, for it to violate the high of the low day and then your stop is just simply, just below the low day, or the vice versa of that is if you're trading something to the downside, if price action violates the low of the high day, that gives you an indication that you're going to get at least a temporary pullback. So and oftentimes when you get that kind of convergence and confluence of close, it means that your momentum has shifted. And so as long as the momentum is shifted, then comes the waiting. Like right now, if I'm bullish on IWM, well, I'm not going to take a trade until I get a confluence of close. And right now, one of my major indicators, my momentum TSI, is pointing down. And it looks like if it continues to fall at this pace, to get where it turned around before would be about the 22nd. So that's one of the ways you can look at that. The last thing I'll leave you with, so we talked about one of the options that we did. The last thing I will leave you, we talked yesterday about Riot, and that's the blockchain company, and it had just blasted out of here. But now we're starting to get a pullback. It had a huge move yesterday of about how many? We had a move yesterday of $17. Well, guess what? Today we had a move of almost $20. And for a stock that is around $70 or $60, that's a pretty good size move. I mean, that's pretty. So where am I looking at it going? I'll leave the fibs up here. I'm looking for a pullback to. It becomes interesting if I get to the 382. It's almost there. 50, 618. And so I would want to put alerts there to ring the bell, and then I would go and look at it again. As long as my TSI is pointing down, I will basically hold off on this until we start to get some bottoming. Now, I may get convergence of clues on my shorter period of time, like an hour or a half-hour charts. But before I would be interested in doing that, I would want my momentum on the daily chart to be towards the bottom, starting to reverse up. That's the only, and I would want price action close to a strong level of support. But the highlight I want to point out on this one, Riot, with some of these this is Riot blockchain, and some of these crypto types stocks, is the brokerages are not messing with, but they're basically tightening up their margin requirements. And so I tried to I tried to set up a covered call on Mara, which is the next one. But what I found is that the brokerage wouldn't let me do it. Well, it wouldn't. Well, it would let me. It wouldn't be within my margin limit, because when I dropped this in, the margin was like there was no margin. In other words, you had to have all the cash to cover however many positions you were gonna buy in Mara. So just keep that in mind. So, and then on Riot, similar type situation. So I would definitely look at with Riot. Riot did have margin available on it, but I think it was reduced because usually on things like the old standbys, the stocks, like Ford, like Netflix, like Apple, you can get almost 3-to-1 leverage on those, 2-to-1 for sure, and so that means you can buy twice as many shares. Not here. You could buy like a quarter more shares with Riot, was the way they had it set up. So just watch and see what your broker is doing in that, because each broker, I use Thinkorswim and TD Ameritrade, and that was their restrictions on the trade. So just be aware, it is a restricted stock stock. So just watch it, and it moves so fast. Would definitely that's another thing I'm going to be looking at this weekend, to see what's the best mechanism to trade these entities, because they move a lot. I mean, and they move fast. And so is it an intraday chart, which I'm pretty sure that's what it's going to come down to. So that's all we've got. If you're joining us on Instagram, please hit the like, share, and save it, and suggest and forward this to some of your friends who might want an update on things going on with the market. And if you're watching us on YouTube, please hit the subscribe button and the bell to be notified when we put up new stuff. And I am going to have a couple of new videos going on to YouTube this weekend. One of them is going to be that how to trade that intraday stock, the TSI. And so that I think you'll find that very informative. So until later, again, so last thing, remember, if you have a stock you want me to review, send me a note, send me a DM, send me a text, however you can get it to it. And because I cannot see you if you've joined us live today, simply because I shut down everything else because of bandwidth considerations. So anyway, aloha. God bless everybody. Have the rest of your Thursday, and have an awesome Friday tomorrow. Aloha.